Hello everybody, and welcome back to another video. This next lesson is going to be discussing low resistance liquidity run and how we can anticipate rapid price delivery. So getting right into it here, what is as you'll commonly see on my charts and other people's charts, LRLR. It stands for low resistance liquidity run. Why do we need to know this? Why is this important? Why is this a beneficial concept for us to be able to understand as a trader? We can spot high probability conditions once we understand low resistance liquidity run. We can anticipate rapid price delivery once we understand low resistance liquidity run. And we can have high probability setups when we understand low resistance liquidity run, and we are combining it with our knowledge of macro power of three concepts and macro power of three entry methods. So if we continue here, an essential concept of getting involved in utilizing your knowledge of low resistance liquidity runs is the smokescreen. It's a terminology I've used before. I've discussed it before on the YouTube, within this group, within live streams, etc., etc. So I'm sure a lot of you guys know what I'm referring to when I say smokescreen as a term, okay? A smokescreen, real quick, just for those who are hearing this for the first time, this perspective. I look at high probability inversions, macro inversions, macro BPRs, high probability breakers, and significant inefficiencies as smokescreens. So what do I mean by smokescreens? These are things that will create and cause breakaway gaps. So we want to be able to utilize smokescreens to anticipate breakaway gaps. Okay, so this knowledge, as I'm sure a lot of you guys have seen and that we'll discuss here, is critical for understanding low resistance liquidity runs. So let's continue forward and look at this next graphic I have here. This is the logic for a bearish scenario. So if you're going to start down here, right? Obviously, if we're bearish, we're looking for sell side liquidity or a discount inefficiency as our target. So that hypothetical target is right here. Current market price is right here. And your smoke screen is right here. Okay, so referring to the previous slide, your smoke screen, let's imagine this is a high probability bearish inversion, right? Whatever is fitting the profile for that fractal of price that you're operating within, okay? You get that close below because we know the bodies tell the story, and then you're classifying this as a high probability bearish inversion. Any inefficiency, any fair value gap above here, because of the smoke screen, which is the high probability inversion, we want to see remain unfilled, or in other words, we'd classify that fair value gap as a breakaway gap. Okay, and this is critical for our understanding. Okay, and then as you can see with my annotations on the right side here, we want to see price, if it does return up to the smoke screen, push price lower to our target. But how do we want to see it push price? How do we want to see it deliver? With speed. Okay, and we're going to talk about this more. So this is one side of the equation, your knowledge of smokescreens and how we internalize these PD arrays and understand when a fair value gap should be left unfilled. This is one side of the equation. So let's continue forward for a bullish scenario just so everybody's clear. If our target is up here, buy side liquidity, current market price is right here. So we've just closed above this area of interest. It becomes our smokescreen. Let's stick with that same example, but just flip it. A high probability bullish inversion. Okay. Any return into that smokescreen, the high probability bullish inversion, we want to see price higher. Push price higher. And anything under, any fair value gap under that smokescreen, we want to see it remain unfilled and classify it as a breakaway gap. Okay, just like the bearish scenario, we want to see support from this smokescreen, but how do we want to see price deliver? With speed, and we're going to talk about this. So continuing forward, we really want to focus on this. So I've just taken that upper portion from the last bullish example, and we still have our target in that current market price that we were talking about. Okay, so we mentioned we want to see speed above current market price, above the smokescreen to the target. But what do we want to combine with the knowledge of smokescreens when we are bullish? We want to see a lot of swing highs between current market price, or where our entry would be, and our target. Okay, and combining this knowledge and this logic is going to get you not only the best setups, not only give you a great understanding of what price should or shouldn't do, but how you can expect price to deliver. And we've seen this type of speedy delivery in the past couple streams that we've done together as a group. Okay, we'll continue forward here. Just a bearish scenario, flip it again so everybody is clear. If we have current market price or your entry here for your short setup and your target down here, between your entry and your target, you want to see a lot of swing lows between current market price and your target, right? And what do I always say? You want to see as much engineered liquidity. This is just an extension of that logic and that perspective I always discuss, okay? If we're looking for a short between our target here and our entry, you want to see as much internal engineered liquidity as possible. So what does this look like for a bullish scenario? We have our engineered buy side up here, right? Whatever you're targeting externally for that session, that trade, right? This could be a session high, with best case, of course, engineered buy side liquidity like this, falling just short of it. In other words, you have a clear target, right? And from your potential entry, okay, in this case, we're looking at an inversion, to that external target, you want to see as much swing highs left, as much engineered buy side liquidity falling short of your final target. And what do we see? A high here, a high here, a high here, all falling short of this. But on top of this, when we look at low resistance liquidity runs, you're going to see a bunch of highs, but you're also not going to want to see a bunch of unfilled inefficiencies. Because as price expands, there's going to be no reason but just ripping all these highs, not just to go up to deliver to an unfilled inefficiency and go lower. Right? So when you see no fair value gaps, no SIBIs or bearish fair value gaps from this sell side leg that hadn't been delivered to yet, and then you also couple that with a high here, a high here, a high here, and then ultimately these equal highs up top, that's when you can get the best runs. Now, what makes this setup even better? When you combine your knowledge of macro power of 3, right? And I won't harp on it here because you guys know what we look for. But for a bull scenario, below macro opening price, sweep sell side liquidity, use your high probability PD arrays as your entry technique. So you're combining your ability to identify this turning point inside of these macro windows, but then also you're looking back at the left side of the curve and saying, what type of delivery do we see between our entry with macro power of 3 and our terminus? Okay, so let's continue. And what do we see here? This is today's example. So recall, when we were reading this, we're looking at potential speed, right? If we are to go lower, and this is to be a high as we're climbing the steps down the stairs, right, per se, we're looking at the left side of the curve. In this case, of course, this is a reversal up top, a high of day made, and then we reverse lower, okay? We're just looking back at the bullish delivery here and saying, okay, what are we seeing, right? First and foremost, we see this BISI support price higher. Once we close below, it becomes what? A high probability bearish inversion. Okay? But more specifically, I have this diagonal trend line labeled LR, right? And why can we expect LR, right? Why is there potential for that as you continue to build your narrative when you have these profiles like this, right? Swing low here, no inefficiency. Swing low here, no inefficiency. Swing low, swing low, swing low. Swing low, opening range low. So if your terminus is a session low, and even you can do this low as we're discussing, right? So it's just a bit more clean. But if we're being technical, this is the opening range low, okay? But if terminus is this opening range low, you're looking at this leg internally and saying, okay, we have all these swing lows. If price is going to reverse, it should do it with speed, right? We want to see it rip all the way down here, right? Because it should just run all that liquidity. It's not just going to run one of these 1 minute swing lows and then we don't want to see it just reverse. We want to see it slice through it like a hot knife through butter. Okay, so identifying this type of delivery and then also understanding high probability PD arrays and smoke screens, you can get very precise ideas of when to expect speed. So here, right, when would I really, really want to see speed? Okay, and start to, after looking at this, also say, okay, it's making sense with all these swing lows. We have this BISI, right, initially push price higher. So if we were to be remaining in a state of buy-side delivery, do we want to see it close below that? No. So it's a sign of a reversal, okay? But we know that the high probability bearish inversion is a smoke screen. So any fair value gap here, should remain open as a breakaway gap and price shouldn't deliver to it. And even this one in here as well, right? It's just beautiful. Okay. On top of that, right here, when price closes below that BISI and it classifies it as a high probability bearish inversion, that's when you're telling yourself, we don't want to see this deliver to. We don't want to see this deliver to, of course, by extension. Okay. And if you're looking from the low of this high probability bearish inversion to the high of it, there's no inefficiencies for us to deliver into here. And we know that there's a bunch of lows over here. So we're saying, okay, if we're going to continue lower, we want to see some speed. We want to see us start to pick up. We want to see us go lower. And the only thing is standing in the way from current market price up here and this target down here is what? The new week opening gap. That's your roadblock. Once you close below it, price opens up, comes back into the tick, and delivers with speed to the low. So we're combining what we see on the left side of the curve with all these swing lows and lack of inefficiencies that need to be filled out per se, and our knowledge of how to identify smoke screens, right? It's very, very interesting when you can see and expect a fair value gap to be a breakaway, right? So right here, you're looking up above when you're in a bearish scenario and you're looking at a potential bearish low resistance liquidity run to sell side liquidity. You're looking above wherever current market price is, and you're saying, well, what else is there to do above market price? We want to see these remain unfilled, so all the business up here should be done. So we don't want to see price return to anything above that high probability bearish inversion. We want to see it show us signatures of weakness. Okay, so your ability to read order flow and understand which PD rays are significant and which PD rays are not, coupled with all these swing lows, is when you're going to not only get the best setups, but you're going to be able to see clean delivery and expect quick delivery, right? On top of this, where were we when we made this high and just upon the 9:30 open, the opening range in the first portion of the AM session today? Above 9:30 opening price here, above midnight opening price, above the new week opening gap, and do recall the new week opening gap high is Sunday's opening price because we gapped up yesterday on Sunday, right? So it's fitting the profile for a potential short setup or a short reversal above 3 key opening prices, and cherry on top, above 950 macro opening price as well. Right? So you're building your narrative. All these things that we discussed, not only in this video, but all the videos, all the live streams we do as well, they're tools that you're utilizing as you gain your skill set, as you sharpen your edge, as you sharpen your sword, right? And you're going to start to see when they are applicable. Okay. And if you're looking for the best of the best setups, it's going to be utilizing these high probability PD arrays when you see delivery like this as well. Okay. And it's very, very powerful. Very, very powerful. And it's an interesting thing when you're not only building your buys and saying, okay, yeah, we're above midnight open, we're above 9:30, we're above Sunday open. Maybe it's time to look for a short now. But you start to see what kind of delivery that you want to see. So imagine, we came down and wicked some of this internal range and we start just chopping around. Because we understand what efficient delivery should look like and that we should just slice through all these lows, if that starts to occur and you're in a trade, it's problematic and probably what? A sign that we should wait for the next macro. And a sign that it's probably going to be time distortion until that next macro because we understand the significance of those macro windows. Okay, so as always, thank you guys coming back to another video. Let me know if you guys have any questions within the Discord. Let me know if you guys have any comments on price delivery today in general. I hope you guys enjoyed this video, and we'll start to, now that we've had this video posted out to you guys, we'll start to look at scenarios like this in price. Again, there's going to be times where you'll see a low resistance liquidity run and it'll slice through it beautifully, but there's going to be times that, as I mentioned, it's going to wick something internally and then start to chop around. And you're going to be able to see it and say, yep, it looks like it's going to consolidate, or we're going to have time distortion until the next macro. So I'll talk with everyone soon and stay safe.